Sridhar Sivaram in the studios with us. Sridhar, we love it when you come by.
Yeah, it's good to be on the studios. Thanks for inviting me.
Yeah, so we are seeing all of this, since we just talked about it, I'm going to start with that. All of this buzz in the primary market, and yes, you win some, you lose some. But are you seeing it from a distance, wondering why all the craze, or are you now in the thick of it and looking at picking winners?
No, so we are very selective on the primary market. Even on the block deals, we are very selective. So wherever we think it makes sense. So of the hundreds of IPOs that are coming, few are very good. So we do participate.
Of the hundreds, few are good.
Yeah.
So the hit rate is what? The lower single digit?
But you can see from the listing that the listing gains in most cases are very muted as compared to the oversubscription. So we've seen in the past. So we've seen 2007-8 when we had the IPO boom. Much before when I started in the 94s, 95, we had this IPO boom where people used to, participate in every IPO thinking it's gold mine. I think investors will evolve. I mean, we are newer investors coming into the market, and this is the learning curve for them that all that glitters is not gold.
I think it's important for us to maybe save them some pain from what you're seeing. Because a lot of investors watching this show right now, Sridhar, and many of them new investors, because that's who we also want to talk to here on NDTV Profit. What would be your advice to them when they're looking at all of these IPOs coming up at a time when there is an excess of information?
Yeah, so I think the simple advice is to follow the mutual fund route, because obviously the fund manager is an expert. I'm not part of the industry, but I'm still recommending that is the best way for a industry, for a new investor to participate in this equity market boom that we are seeing. We think the markets will give very reasonable returns over the medium to long term, but in between there could be volatility. So unless you are an expert in that subject or in that sector, I won't advise investors to directly participate in the market, but it is left to individual investors to take their own call.
Most certainly. Sridhar, what's your sense though? There has been a bit of a pickup, and that was the first point in our case for a chat for your convo.
Sure.
There's been a bit of a reasonable pickup from the 22,000 levels in a swift fashion, as these days all these bottoms are made as well. Have we done enough to justify what might be a iffy earnings year, or do you reckon you're constructive on earnings and therefore there is more upside for the markets?
So the context is that globally all markets have rallied since early April. So if you see that was the bottom. US is hitting all-time highs. But if you take the two best performing markets over the last 5 years, which is US and India, they've actually underperformed all the other markets. So Europe year to date is up 30, 20, 25%. Asia, if you see, people haven't noticed, but Korea is already up 40% year to date. Taiwan is up 15 odd percent. China is up about 15 to 18%, whichever index you look at. India is up maybe 6, 7% or 8%. So from that standpoint, India has participated along with global markets. As you said, our earnings haven't been that great. I don't see that changing in the next 2 quarters. Our view is that the second half, when earnings starts to improve. So this is a consolidation phase. We are participating with global markets. My worry will be more, the global macro, which looks iffy. India looks reasonably fine to have a sideways market for a while. And as earnings pick up from the second half, maybe we can continue with the rally. That's the broad sense I have.
Okay. And, we are going to talk about your domestic views on inflation, insurance, etc. But since you look at the globe with such a great eye, just a word on what kind of an impact do you think this trade deals, lack of them, China data, as believable as it may or may not be, what does all of this mean for risk assets like or equities in India?
So my broad view on reciprocal tariff is actually in favor of Trump. If it was implemented in the way it was designed, that if we are charging you X%, then US will also charge. If we make it 0, they'll also make it 0. If that was the broad idea of reciprocal tariff, I completely support that. India was happy to reduce. Let's be fair, India's tariffs for a lot of products were abnormally high, be it on two-wheelers. I mean, he keeps talking about Harley Davidson. How many people use Harley Davidson? And to have a 70% tariff on that, So there are many more like that. The high-end drugs had almost 100% tariff. So if we were to reduce those tariffs to zero or whatever low point we could get to, US would also reciprocate, which just seems to be a fair number. But as the negotiations are going on with other countries, the Vietnam numbers have come out, it looks like tariffs is a way to generate revenue for US. Then it becomes complicated. So I'm not very sure where it leads to. I'm not sure how much India will sign, more than India, whether China will agree or not. And those are the complicated issues. So if you ask me, I'm most worried about the US macro than any other country, because whatever this discussion on this beautiful bill or big beautiful bill that they call about, it doesn't bring about change in the fiscal deficit of US. Experts believe that that could touch almost 7%. So I would be looking at the bond yields very closely. If it comes closer to 5%, there could be serious risk of in global markets. I know some experts in India believe that India is decoupled. I'm not in that camp at all. If there is a global turmoil, India will face the heat. So that's the worry that, if you ask me, my biggest worry would be how this whole thing plays out. And one has to keep a close watch on what's happening with the US macro, fiscal deficit, bond yields, DXY. These are the ones to watch more than anything else right now.
We talk about the big, beautiful bill in the context of addition to the US fiscal deficit and DXY and bond yields, but for people living there, it's having a huge impact. And just an aside, I was talking to someone who told me about how medical care for special needs children have been slashed. And that is something that parents are actually looking on an everyday basis. So, of course, here we look at that story only from that context. But having said that, if there is an impact on the US economy, what does it mean? And you said you don't believe that we're delinked. What does it mean for IT, pharma, auto? Are we being a little blinkered in actually looking at the whole range of that impact?
Yeah, so I think there will surely be an impact. But just keep in mind that India's overall exports to the US is about $80 billion. So in the overall context, we are not as big as, say, a China or a Mexico. Obviously, the Mexico numbers, you have to look with a pinch of salt, because a lot of it is the Chinese stuff which goes through Mexico. They're closer to $400 billion a year. So from that standpoint, our impact should be significantly lesser, but it still will have an impact. And IT sectors, I think, has its own challenges. I think there are too many issues. One, if the discretionary spending in the US comes down, they get affected. Two, my own belief has been for the last 2 years, and it corroborates with the hiring data, that AI does improve productivity of IT professionals, especially at the lower end who do coding. And 30% of India's IT professionals are at the 1 to 3 year bracket of experience. Basically, they're doing low-end coding. Those jobs are significantly getting reduced because AI is helping them to do the job. So I think there's a structural issue with AI and Indian IT sector. There is an opportunity which comes up, but it comes with a lag, which is you have the threat first and the opportunity comes later. And I think companies which are able to reinvent themselves, disrupt themselves, will be the winners. Time will tell who are the ones. But so that's the problem with the IT sector. So I agree, even on the pharma side, there will be some impact, but we are on the generic side. So I don't see that having too much of an impact. Even if there is a tariff on that, the end customer there will have to pay.
What about auto components?
Auto components will also, but see, the overall number is only 80 billion.
Yeah.
So how much?
Yeah, we're not Vietnam, who is,
so we are not that dependent. So I won't be so worried about what happens to individual sector. Yeah, there'll be some companies who have a larger exposure to the US, they'll get affected. Maybe they'll put up a plant in the US or whatever. But keep in mind that this administration is there for 4 years. We don't have visibility for what happens after 4 years when the next administration comes, and whether these policies will continue. So if you look at what, say, the Apple CEO says, that even if he wants, he cannot shift all the people from plants from China to US, because there aren't enough engineers available in the US to do some of these jobs, or even the people at the floor level to do the job. So I think it's a bit more complicated. But as I said, I remain worried on the US more than any other market, and that's what one should focus on.
Sridhar, just a word though, and then we'll move to India as well, I'm sure. But just a word on this news story that has come up, right? Wherein Foxconn has asked a bunch of its workers who are working in India to move back to China. I mean, what is this? Is this geopolitics? Is it something else?
No, it is geopolitics because, as I said, if China's annual exports to the US is, say, 450 billion, add another 200 from Mexico, add maybe 100 odd from Vietnam, you're talking of, you know, $700–800 billion of exports a year, and all these get affected with the tariff. So this is the arm twisting that China is trying to do. Rare earth is the other one that they're trying to arm twist. As the D-Day is coming, they're trying to show who the boss is. But to be fair, their manufacturing is at such a scale and they have reached such heights. It's very difficult to believe that you know, the world can, you know, live without manufacturing happening in China. So it's I think very interesting times ahead. It is not going to be easy for India to suddenly ensure or to hope that a lot of manufacturing will shift. Some will definitely shift, but there'll be a lot of challenges, roadblocks on the way.
Okay, and then so let's talk about domestic factors now, right? And one place where I see you constructive, if you will, is on inflation.
Yes.
You are really bearish inflation.
Yes. So I was among the few who said that we'll get a 50 basis points rate cut. But my view was based on a lower inflation trajectory. What I was surprised was the governor did oblige with the 50 basis points, but they did not reduce the inflation. So my view is that Q2 and Q3, we'll get inflation in the range of, say, 2.5 to 75, whereas RBI is at 3.4 and 3.8, I think, or 3.9. They look totally out of sync. And I've spoken to many economists, and some agree with my number, and they have roughly my number, but they are reluctant to put it out in the public domain because it looks so...
we are putting out your numbers in the public domain,
I'm sticking to my number.
What is the why?
I'm very much sticking to my number.
What is the reasoning? What is the
One, we have a base effect.
Okay.
So there is a very favorable base effect that we have, and a distributed rainfall that we have seen this year. That, you know, we've had rains through April, May, and now in June. What is happening is that the vegetable prices have behaved very rationally, as opposed to in the past where vegetable prices used to, you know, spike a lot. So there are multiple factors in this, but the numbers, we have our own model, but it's a very simple model we use. We just don't reach anywhere close to where the RBI number is. So you can hold me to this in a few months. We'll get you know, some of these numbers. And I mean, it's difficult.
Let's come back on the next monetary policy day.
No, policy day I'll not come, but maybe I'll come on another day. But just keep in mind that projecting inflation is one of the most difficult tasks.
Yeah.
Yet I'm putting my neck out on this. You know, with those caveats, that it isn't an easy task to project inflation, especially when you're projecting for 6 months, 9 months ahead.
What is the resultant interest rate cut you see? By the way, if we had an ongoing bet on the on the interest rate cuts, and I was in the 50 basis point camp as well. But what is the projection on interest rate cuts you have?
So I think we need some support from Fed because the differential between India and the US is the lowest that I have seen in the 20 years or 25 years. I don't remember when it was so low. If we get support from the Fed, we could easily go another 25–50 basis points. Keep in mind that CRR is something that most people had not expected.
Yeah.
So we did get a bonanza from the CRR standpoint. So if I was expecting a higher rate cut, I need to moderate that because some part has come through the CRR route. So I would expect that maybe not the next policy, but the policy after that, maybe August or September, whenever the policy after that is, we could see a 25 basis points, because I've seen some of the interviews of the governor, and he said that they are data dependent now. So if the data is supportive, they can, look at interest rates because they are neutral. So they could go either way based on data. But I think the data is going to be very supportive. Time will tell. We'll see how this goes. We'll get a number very soon for the month of June. So that itself will give us some hints on where we go.
You run with NBFCs, therefore, as a result of this, this RBI in the last 6 months has done what people do in probably 2-3 years, right?
Yeah, so NBFCs stand to benefit. Keep in mind that NBFCs in general have been pulling back because, of the irrational exuberance, the way they lent on the unsecured side. Even though the RBI governor, to be fair, was highlighting that there is a risk on this. NBFCs were, sort of maverickly lending on this segment. They have pulled back a bit. So maybe the next 2 quarters may not be that great for them. But if you look beyond that, things look slightly better. I think market's already pricing that. A lot of NBFCs have moved up. But banks have also moved up.
But Sridhar, that's my follow-up to you, right? I remember back in maybe 2020 or thereabouts, right? You guys took a call on PSU banks when nobody was looking at them. And one of the arguments was that they are trading at such low valuations that they could do well. So now, if somebody is looking at NBFCs afresh, there are premium NBFCs trading at 5 times, 4 times. The listing is about 4 times as well. And then there are some which are trading at book or even sub-book as well. Do you play for the valuation catch-up, or do you buy great execution and good valuation?
So in NBFC, we have to be careful that you're looking for a company which has a credit discipline. So this is not just about valuation. Because if you're just playing the valuation, you could get cleaned up if the credit discipline is poor, which is what we discussed MFI in the past. They were looking cheap, but they've got cleaned up in the last 6 months because the credit discipline was very poor. So I think it is a bit more nuanced. It's not like buy any NBFC. It's a bit nuanced, individual NBFCs. But we like even the banks. We know that the next 2 quarters may not be that great, but the governor has given some bonanza in terms of CRR cut, so that helps them in terms of the earnings pickup. So even the banks, if you're willing to ignore the next 2 quarters, and we are hopeful that credit will pick up in the second half. So that's how we are looking at it. So we are okay with private banks, some few PSU banks. Financials in general look fine.
How did you feel about the whole defense story? Were you on the right side of that?
No, we were in the right story. We played the defense story for a while, including some of the PSUs, which also came from a PSU call actually.
Okay, so it was part of a larger.
Yeah, it was a part of a larger trade on PSU. Some of them played very well. To be fair, did we participate in the entire leg? No. I mean, some of them looked expensive even a year back. So we moved out from some of our positions. We still have some positions in defense. Some look very expensive now, to be fair.
Yeah. What are you finding exciting right now with pockets of opportunity? And that's become a tougher and tougher question to answer, admittedly, because you had valuations run up. You now will have this trade deal as the next immediate boost, if nothing else. Where do you see that growth coming from?
So it's, as you rightly said, valuations are not on your side. So we like power equipment as a theme, but their valuations are not on your side. So the best way is to participate in some of these themes when you get corrections, results are not good. Because this looks like a theme which can play out for the next 4-5 years. Because India is going to maybe possibly double its solar, double its wind in the next 3-5 years. We're going to add maybe 20-30% to even our thermal capacity. So you need transmission, you need the turbine manufacturers, you need evacuation. So the entire value chain should do well. So it's individual stocks you'll have to assess. We like wind as a story more than solar. So a lot of those, there are pockets to play, but it's very stock specific. That's how I would put it.
Interesting. Well, we'll do a tiger chat with him as well. But just before that, one thing, and it's gone so right because everybody's been so constructive on insurance. And producers, if you can pull up the 5-year chart on any life insurance firm, right? So pull up HDFC Life, pull up SBI Life, pull up ICICI Pru Life, if you will, and pull up a 5-year chart. And you will see, unless I'm very wrong, these guys have largely flatlined, right? This is not the return that you expect from large companies which are in a growth sector. And Sridhar, full credit to you because save for 1 or 2, these stocks have not given returns. right?
Yeah,
What is
so
your view now? I mean,
my view hasn't changed.
Are you still negative on?
I remain bearish on insurance for simple reason. They're very opaque industry. You know, nothing that they disclose are actual numbers. Everything is estimate. So embedded value is an estimate. Their profits are an estimate. They are not actual profits because they have assumptions on their expenses. So nothing is real. What is real is the number of lives covered. What is real is mortality claims paid, which they don't highlight at all. You have to literally search for them in the web pages, and both look horrendous. The number of lives covered for the top 4 life insurance companies last year fell by 30%. I still don't have an exact answer why they have fallen so much. These are not normal numbers. You don't suddenly reduce 5 crore people have lost their life insurance cover. Why? I mean, this should be discussed, debated. Like microfinance is well discussed, debated. Everybody knows why it has happened. Why life insurance cover has gone down by 30%? 5 crore is not a small number.
Yeah.
5 crore families out of a 30 crore or 35 crore families is a fairly significant number. Their mortality claims are very high. Why? So these are things that you know, the life insurance companies nor do the analysts check all this. So they just go by a global or a macro story that India is underpenetrated, which again I contest. India is one of the most overpenetrated life insurance.
Really?
Yeah, so we can have an entire show on that, but
no, but the cliff notes on it, because this is very interesting.
It is, because you have to compare life insurance penetration with per capita. Why is it that when life insurance penetration is discussed, we don't look at the China numbers at all? Because we are over-penetrated more than China. We have 2 life insurance policy per family in India, if you take the average. So I can go on. It's an over-penetrated industry. We don't sell protection. That is the problem. We are selling savings.
Savings.
So this is the point. When I challenge life insurance company, they say our protection is under-penetrated. I agree, protection is under-penetrated, but you're not selling protection.
You're selling
Every
savings.
guy who comes to you, tell me when a life insurance agent or a bank has come to you for protection. They would come and say, ma'am, ye kharid lo, ma'am, ye
You have
ULIP
to
le lo.
wrestle with them to say, I want a plain term plan.
So that's the issue. So I think I don't want to, you know, get into this discussion more, but I still remain bearish on the industry as a whole. They still have a lot of regulatory arbitrage, which I'm not even discussing, which may go over a period of time.
Guys,
so let's leave it at that.
I was shocked that there is yet another NFO from a life insurance company announced yesterday or day before. It's a life insurance firm. How can you announce a new fund offer on the mutual fund route? Let it be a different category, but be that as it may. Okay, very quickly, Sridhar. What's the latest? Sridhar Sivaram touts Indian tourism by virtue of going to tiger parks. What is the latest really good park, undiscovered gem?
The best park this season by far has been Umred Karandla in Maharashtra. I mean, it has been the blockbuster because of a single tigress. I should have shared. Oh, that is the photograph from Umred Karandla.
Yeah, we picked it up from your
so
Instagram.
so there is a mother with 5 cubs there, and that park has been the standout this year. I don't think anybody has gone back disappointed, and it's a very small park. And whoever has gone there has had you know, blockbuster sightings. I think it can continue even for the next season.
Amazing, amazing. Yeah, easier to spot tigers than winners in the market.
I think yes.
and believe me, that's a tough one. Beautiful pictures. Thank you, Sridhar. We've picked it up from your own feed, so courtesy to you there completely. Sridhar Sivaram, always a pleasure to have you.
Thank you. Thanks for calling.